So, hello and welcome back, guys, to another trade recap. So, we are going to be doing the trade recap of yesterday, 14th January. I had taken the trade. It was a small loss, and the loss was just because of the me failing to realize the pullback of the market. Okay, because overall my draw on liquidity was spot on. Everything was perfect. My execution, like I waited, I didn't early entry or anything like that. Just my overall understanding of the market at that point of time was a little bit mistaken. Okay, so quickly we'll be going through it overall. So going into the higher time frame, I had a pretty bearish bias going into the day because overall you see here 1 hour time frame. Overall we had made a huge 1 hour fair value gap, and we were nicely rejecting the consequent encroachment of that fair value gap, and also we had closed inside a 4 hour fair value gap. Okay, it was very important. 4 hour fair value gap, it had closed nicely. 1 hour had nicely closed it, so that gave me a pretty confident bias that we were targeting all these lows present down here. Okay. So now when the market had opened, not market had opened, it was pre-market 8 a.m. As you can see, it had already rejected the 1 hour consequent encroachment. Okay. Which gave it a little bit like early bias that market can eventually before 9:30 a.m. go down and sweep down all these liquidities. Okay. And that the same thing happened. So if you see here 9:30 a.m. open, first shot back, shot up to retest the 1 hour fair value gap, and you see 9:30 a.m. open. We the 9:30 a.m. open had a down candle, but then we swept sell side liquidity which was London lowest present at the time. Then we went back up to the 1 hour fair value gap, and we rejected that very quickly. Now what I didn't consider in mind was after we had such a big move, you see here, after we had such a big move after the 9:30 a.m. open, which opens 10 a.m. the hour candle. Then what had happened was I was expecting like if the market has already has fallen till here, like this much retracement cannot be justified for such a big move. If the drawn liquidity is still lower. Okay, so I had considered this case, but the a genuine case was supposed to be after the market has made such a big move, it is like not does not has to return to the 50%, but at least it must return to the 75% before it heads down. If the drawn liquidity is still lower, that's the main point. If the drawn liquidity is not lowered, then it can just head back up from here. Okay, that doesn't make any sense. But if the drawn liquidity is still lower, it needs to at least retrace to a certain point before coming down back. Okay. Now, if this much movement had not happened before, if the movement was only this much, then we could have expected a small retracement. If the movement was small, if this was the movement, then if you see here, this one, yeah, this is the small movement compared to this one. But when full this movement has happened, I can at least expect the market can most likely return to the 50% or not even 50%, 75% of the overall range. Okay. So after the market had come here, then it started showing some bullish action. Then I had thought that this was the fair value gap of the 1 hour fair value gap most likely. Let me check once more. No, this is not the 1 hour fair value gap. The 15 minute. I think so. Yeah. So mainly most likely if you check here, a drawn liquidity was still lower. Okay, there is 1 hour fair value gap 10, and there was a volume imbalance, and there was multiple lows present down here. So now going on to the 1 minute time frame, you see there was a 15-minute fair value gap here, which I had not accounted for. Okay, to delete this, oh no, the entry actually. This fair value gap I had not noticed while the market was in action. I'll just show you my live session recording. So this is the 15 minutes. So after the market had already retraced to here, if my drawn liquidity is still going lower, then I cannot just expect small movement then the market to trade down. Okay, I like there must be a like retracement and a big retracement before the market eventually head to the downside. Okay, so but in this case, the market did return to the 0.5%. So if you see, if I just play the market from here, we see here we started showing some bearish momentum after the I mean, after some heavy weeks. Then we got a 1 minute close inside the fair value gap. Okay, so I considered this the initial pullback into the 5 minute time frame. Now, technically, this is a setup, but overall, I didn't take this into consideration. If this was the case, this exact same thing here would be absolutely perfect. If I got the same entry here, I would have this would be the perfect A plus setup. But here it is not a A plus setup because technically it has not even reversed a little bit. It didn't even come to the 0.25%. Okay, it came here, but it just rejected that. So I should have at least waited for the market to show me good pullback retracement, then I could have thought about taking an entry. Okay, see after as 1 minute fair value gap got inverse, then here my entry was. Now the mistake that I made, I've already said that I would have anticipated the market would have gone a little bit higher, because if the market wanted to head lower, it needs to go higher first, and vice versa. If the market wants to go higher, it needs to go lower first. Okay, so that's the thing I didn't take into consideration. So now if I show you the session recording, I think this was the one. Yeah, this is the one. So if you see market had just started falling and I'm waiting for 9:50 a.m. to open. Still going 9:58, 9:50. As the market had opened, I'm still waiting for the perfect consolidation. Then here I marked the 5 minute fair value gap, but I have failed to notice that there is also a 15-minute gap, which market most likely will return to if the drawn liquidity is still lower. If the drawn liquidity was not lower, here many people I have seen taken the uh, a buy trade here. I don't know how did that happen, because like technically you can, like this is the market structure shift and what happened. We are trading like macro. And here you could have gotten an entry, but technically if the draw liquidity is lower, I'm not going to just trade reversal. Oh, if I know my draw liquidity is lower, why would I trade take opposite trend? Okay. So after this market I retraced. Then as you can see, this is technical taken in a 30-second time frame. So I had marked out the 1 minute fair value gap. Yes, not here point as you can see. And I waited. Here, okay, the market is falling. Then here was the 5 minute fair value gap when it started rejecting. Then as the market had closed below the one minute fair value gap, and here I placed my entry. Now most likely it happens either I get stopped out pretty quickly, or the market just goes to my break-even point pretty quickly. So after this huge candle formed, and there was a part of me saying that we can reject this point. Okay, so I put my stop loss. Here I didn't get actually stopped out. I don't know how. Okay, my stop loss was here. As you can see, I'm adjusting. Like here, I've gotten stopped out in the candle here. You see, it has swept here this high, but in my MetaTrader, it had not swept that high. So I've not gotten stopped out till here. So I'm thinking I'm pretty safe, because my previous all the three trades, whatever all were like this. It just 1 2 points away from my stop loss, and it came in return. Okay. So now I'm thinking that maybe we can still return. But since we I go into the lower time frame and it shows that it is rejecting the 1 minute IFBG, which was eventually my overall draw liquidity. My draw liquidity, my point of interest in which I entered the trade. Oh, so after this, I got a stopped out here nicely, and market started going towards the upside, and eventually it did retrace here. You can see here. Here I got stopped out. Then the market came in, rejected the 15-minute gap. Here rejected this. Here would have been my, here I would have seen. No, technically this is out of my macro timing. So I don't know if I would have taken this trade or not taken this trade. But technically this trade was, I can say it is not a very good outcome based on my trade. But I would have taken this trade multiple times. But just a way of analyzing that where the market can go, and you can just form a narrative on that, that will be helpful. Okay, so it rejected the 5 minute fair value gap, and you can see then it rejected it. And here, so this would have been my change in the state. rejecting the 15-minute and as well as the 5-minute as well as the overall range 50%. So three confluences are aligning together. After this change in the state, open. Now if I open my position here, stop loss just above this high and target the low. See, so the perfect trade. See, take profit would have been very nicely. So this would have been the initial overall trade, but this was technically out of my macro time frame, and so I would agree that I have like little bit early entry. I was not impatient, but I failed to analyze. I failed to realize that while I was live in the market that if the drawn liquidity is lower, the market needs to go higher, fill some inefficiencies, then we can eventually head lower. Okay. So this would have been the perfect trade here, not this. So I would have gone break even here and taken out my full position here on the overall drawn liquidity. So my drawn liquidity was spot on. This 1 hour fair value gap was spot on. Just here I could fail to realize that the market can still go higher and eventually come back lower. As you can see in the 5-minute time frame as well. So yeah, that was my overall trade. And yeah, thank you so much guys for watching. If you have any question, you can leave it down in the comment section. Bye bye. Take care.